Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 4th of March. Starting with the FTSE 100, which I suppose wasn't far off making it to the 9,030 target, which is the top of that rising trend channel from the beginning of last year. But we're back and heading for potential support there around 87.50, although at least while we're above that, looking for 9,000 plus to be hit by the end of this month, or even sooner. Worst case at the moment is we have to test 86.50, which is the uptrend line there from back in the middle of January. Moving along to the DAX, and here we actually hit the top of the channel there, which is good to know, because that's basically ahead of schedule, and also shows us that the channel, or that channel drawn there from November, was correctly drawn. We've got to have another go, I suppose, while we're above the recent support, 22,200, and so retest hopefully of 23,300, or that area could be seen later this week and this month. Worst case at the moment is we're going to test the floor of the channel there at 22,000 before we then head higher again. Moving on to the Dow, which has been a bit of a laggard, obviously not helped by the uncertainties caused by the Ukraine situation and also the tariffs. Here we've hit the floor of that rising trend channel quite hard. That was what we didn't want this market to do, but at least it's obeying the charting, so 42,900 there. The risk of not only that being broken, but or that being support, but also move down to 42,500 in the floor of the January gap. And I suppose as a worst case, we could head down to rather the 200-day moving average, 41,800. We haven't been below the 200-day line for quite a while. I'm guessing many months. November 2023. So that is absolutely amazing. And I suppose one could say we're rather overdue a test of the 200-day line, a bit like we will see on the Bitcoin chart. The other point to notice, we've got and have had an RSI, a clear RSI failure there, a neutral 50, which is a leading indicator on the downside. In fact, you could argue we've had two of those, but the multiple bull traps of a falling 50-day line, not a good look. Next up is the aforementioned Bitcoin, and here it's been a rocky ride, which is obviously what you expect and probably deserve in such situations. So the blip back up towards 90,000 plus, rather short-lived on the news of the expected news of the US Strategic Crypto Fund, and we're now back again, potentially heading towards the floor of that channel there, 79,000, that channel there from March last year. And another RSI 50 failure there to go with the sort of the 4 or 5 that we've had since the beginning of last month. So not a great look there either at the moment. A break of 79,000 could take us back towards the pre-November resistance zone around 75,000. Moving along to gold, and here there was a bit of a rug pull as well, but the metal managing to get back above 28.75, which was our nominal support, so overshot down towards the sub 28.50 level, but it looks as though we're back in the range, 28.75, hopefully then back towards the 29.80 level, and then heading on to the top of that channel there from February last year, as high as 30.20 by the end of this month. I'd like to see the RSI remain above neutral 50 after the brief dive below it. Moving along to the Great British Pound, where I'm still enjoying the aftermath of Deutsche Bank saying it was a seller on January the 10th. You can see that was almost the bottom. They almost called the low there, which is just what you'd expect from an investment bank with a big call. And in terms of the near-term scenario here, we've got this market breaking out through $1.27 with a rising 50-day line. So that looks as though it's actually quite a serious turnaround here and against expectations. Next target here towards $1.30 while we're above the recent support there around 125.60. But the key here is that we've got that rising 50-day line suggesting a reasonable and rather unexpected move to the upside is on its way after the bear trap below November support there, $1.23. Moving on to the stocks, and starting off with the company with perhaps one of the most irritating names that one could have, Abdrn. And here you can see that we managed to blow the doors off the previous target there, the broadening triangle around £1.63. Next level up here for Aberdn is up towards the £2 level, hopefully by the end of this month. But basically a decent gap higher that we had, bear trap gap reversal that we had in January, and the shares following on through on that with multiple bounces above neutral 50 on the RSI if you were looking at that situation. Next up is CleanTech Lithium, which has been in the wars of late, and here you can see that the shares currently as oversold as they were in April last year. After that, they effectively tripled in about 6 weeks. Obviously, bulls of the company will be hoping that with an RSI in the mid-teens, as it was back in April last year, we will at least see a rebound back towards the 50-day moving average at 15 pence. Ideally, a bit more than that, maybe up to the 20 pence level, given how oversold the shares are at the moment. Moving on along to Iomart, which is a decent setup. It's in the model portfolio as well. That's on the basis that we've got a bear trap island reversal, so gapping down last month and then gapping up last month. Current situation is we're looking a little bit sheepish around the higher levels, so around 44, 45 pence, but at least while we're above the 40 pence area, which was neckline resistance, looking for the shares to fill the gap up to 60 pence. Although I suppose it's a bit difficult to work out what would give the stock that level of enthusiasm after the hit that it took last month. On to Jade, which I couldn't resist on the basis that we've got a rising trend channel base, but also we've got this market delivering a sideways shuffle above a now rising 50-day moving average. If you look historically over the big rises of, say, last year and the year before, many of them started with that kind of sideways shuffle above a rising 50-day line. The initial target here up to 0.52, while we're above recent support at 0.18. So let's see if that works. Situation which has definitely worked, and I think probably nobody was expecting it to work either, is Metals One, where the shares have almost tripled from their low back at the end of January. There was a suspicion that the shares were very oversold, and there was bullish divergence with that lower low, and so they could rebound. We were initially looking for 0.4, but the shares have blown the doors off that, and we're looking for the best case scenario target now as high as 0.67 by the end of this month. Very impressive with that. Very impressed with that, especially given the way that it's actually a bear trap island reversal, so gapping down to a new low, and then last week gapping up, and I did say that that's why we like bear trap island reversals so much. Moving along to Panthera, where I suppose one can almost feel the victory over the Indian government and the millions or billions that will come in. Current situation is that we managed to hit the top of that rising trend channel, which I suppose is a little bit higher than that, maybe up to the 12.75 level. But at least while we're above the old resistance there at 11.5 pence, looking for a move up to as high as 20.75 pence, the upper parallel of that rising trend channel from last summer, and hoping for that maybe as soon as the end of this month, if not the end of next month. But shares finally on their way with that key reversal to the upside, then the unfilled gap to the upside through resistance that we had yesterday. So that suggests this move is going to be quite serious, or already is serious in fact. Quartix is next, a stock which I managed to ignore yesterday, but today realized that might have been a mistake. We've got a rising trend channel here from back in the autumn of 2023. Top of the channel there heading for £2.12, but we actually might be getting rather more than that, given the way that the shares have also delivered a bear trap island reversal, so gapping down to a new low and then gapping up. That's one of our favourite signals, as is the run up to a golden cross, which we're about a day or two away from. So actually the £2.12 target could be the minimum on the upside, and in fact we could be looking for as high as £2.80 or 90 by the end of next month. But obviously that is with a degree of optimism, and a lot of things have to go right there on that. Moving along to a stock where obviously nobody anticipated today's news at all, but we did actually have a rally and a rebound for Westminster Group on Friday. Obviously the shares turned back yesterday, but here we've got a situation where there was bullish divergence. I didn't point it out, and we were looking for 1.75 pence. Probably now, if we can stay above the floor of the gap there at 1.3 pence, we could still get up to 2.2 pence at the 200-day moving average, although obviously this stock specializes in being sold into strength. Finishing off with Zenith Energy, where it's all about the arbitration news. We've had the shares sort of wobble a bit more than maybe we wanted them to, but there's a line of resistance there around the 8 3/4 level. We bounced off a rising 50-day line, so we're basically back on track for the rising trend channel rebound, and at least while we're above that 50-day line, around 7 pence, quite confident that we could break the resistance line there from January at 8.5 and then head higher to the previously suggested area of 14 or 15 pence by the end of this month. But the key here, holding above 7 pence if we can. That's it for me today. More updates tomorrow.